Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show. I'm your host, Dan Breslin, and this is episode 143 with Roni Elias on litigation finance. Roni is an attorney with a commercial real estate investment background, having worked with the fund that grew their portfolio to more than $500 million in assets under management. He's personally seen more than $9 billion worth of litigation take place throughout his career, and joins us today to discuss how to finance a case like this in the hundreds of thousands or even $1 million plus price for the litigation, should you ever find yourself in a tough situation needing to seek court assistance for relief from that tough situation. Let's allow Roni to explain. Roni, welcome to the REI Diamond Show. How you doing today?
Wonderful, Will. Thanks so much for having me on. How are you?
I am fantastic. We're just wrapping up here. By the time the listeners get a hold of our episode here, it will be probably the dead of winter and everybody will be complaining about how cold it is here in Chicago. But for today, we have 65 degrees and sunny, and I'm loving life. How about you?
Yeah. Good weather now, but it is getting a little bit cooler here in Virginia.
Nice. Cool. So for listeners who would like a little maybe background on today's guest, you here, Roni, what would be kind of your background in real estate, maybe your your Reader's Digest version of your career progression up to the point that you're at today, and then you can kind of touch on a little bit the introduction of litigation finance, our main topic of conversation today.
Sure thing. Background is was at a fund before where I'm at now at Town Center Partners. Grew the fund to over $520 million worth of real estate assets, and those assets were a mixture of multifamily, commercial, triple net assets, i.e. National tenant, and where the tenant was just responsible for everything. That's why it's called triple net. To office buildings and so forth. Multiple law degrees, hold a JD and an LLM and an MBA. Also have 4 real estate licenses and CCIM, and a longtime member of the International Council of Shopping Centers. Truly have a love for real estate. It's a wonderful tool for working with tenants, building wealth for your investors and ownership group, and also it's great to kind of see taking something that we did a ton of development work, a picture that's on a piece of paper, and transforming it to something that you could physically see and touch, and so forth. Now are here at Town Center Partners. We're in Northern Virginia, we're roughly 20 minutes out of Washington D.C., and have transitioned into litigation finance, which is an exciting kind of somewhat new, I would say, kind of business model out here in the marketplace. And again, we're using it in these last couple, I'd say, year to 6 months. It has been a powerful tool for real estate owners and investors.
Fantastic. So I do want to have one quick segue here, this little quick conversation. So I'm not going to take up too much time, but triple net leases and the fund, the $520 million fund, was that mostly, how is money made from the fund's perspective? It's not like you're buying a triple net lease out of distressed inventory and you're able to like raise rents or anything like that. Is it mostly like an inflation kind of play where the rents are increasing over time, or were you guys specifically value? Go ahead.
No, we were long-term real estate owners and holders, and then continuously, any profits that we made, we were just acquiring new assets. Usually in our triple net deals, every 5 or 10 years, there was a substantial rent bump that then, allowed us, one, to, pull out more cash, maybe through a refinance, and use that to go acquire more assets, or we were just building up that cash flow pile to acquire new assets. We were predominantly long-term holders, and just kind of, again, rolling the assets into buying more and more items and so forth.
So has that business model become more risky with the transitions that we've all seen with Amazon and retail real estate in general? Or did you just happen to look for getting into something else to shake things up, or was it like a concerted decision to go into a new business model and leave the triple net world behind?
I mean, we definitely, when I was at the fund, we definitely felt the heartburn, the ache, the anguish, of that, 07 to 09 period where, the market really kind of, took a beating, there. Amazon truly has, changed, the marketplace. It's unfortunate, you kind of, on a monthly basis now are hearing of some type of retailer going out of business, which, if you were to go back, 10, 15 years, it was kind of an anomaly to kind of hear of a retailer going belly up. But now it's becoming kind of the course of doing business. And, that's why kind of we were, transitioning when that change happened, going into, some type of multifamily assets, residential, and also, office. But office, we also kind of felt some burn there too, because, some businesses kind of just, went belly up, and, at that point, trying to fill back space up was also difficult.
Yeah, I see I'm on a lot of buyers lists for triple net product that's out there right now, and it seems like once a week, maybe twice a week, I'm getting Walgreens triple net, nice corner property, the Walgreens strategy of getting that the prime corner, wherever they're located, and then building the $3 million property out. And then I check the stock and I do some reading, like, oh, okay, this is like much too risky of a deal. Like, I won't want to be in this thing for the next 10 years as the shake up with online pharmacy and the kind of things that Amazon and the rest have hit. But aside from that, enough on my tangent there. I appreciate you playing ball with me. So, Roni, $520 million worth of deals, tons of refinances. I imagine some sales, some development, add in a couple law degrees, and you must have seen a handful of pretty expensive litigation and cases kind of unfold, or maybe a lot. Maybe you could just shed some light on the volume or the size of litigation when you're doing deals in the millions, tens of millions, maybe even hundreds of millions of dollars, and what that could look like to present a problem of why someone might want litigation finance.
Yeah, I mean, my career now has spanned, being involved in litigation, reaching over $9 billion worth. And, as, whether you're in the real estate business or, even, you've created a company that you continuously build up, I think we all start out with the ideology, I don't want to get sued, I don't want to sue anyone. Unfortunately, as you continue to grow, do more deals, the chances of something going awry or, a disagreement happen, I think just, explodes in the possibilities of something going wrong. And, that's why, kind of when I transitioned out of the fund and came here at Town Center Partners and started with litigation finance, if you look at kind of our motto or our statement, our mission is justice, we all believe in that mantra, and, seeing it to help folks via litigation finance, it's been such a great tool because, we do see unfortunate incidents where, some large company or even large tenant try to take advantage of, a mom and pop landlord, or, right now the economy is pretty hot, deals are moving at a very brisk pace, very low cap rates. So, hey, it's a great time to be a seller. And what we've seen is, this syndicator or, small to mid-size owner is trying to buy this property, massive, or, high net worth, extreme high net worth individual or public REIT, tries to come in, whispers into the ear of the seller, why don't you just call them on a technical default? And, if you call them on a technical default, we'll pay you an extra $1 or $2 million. The seller's like, ooh, I can make an extra $1 million or $2 million, and, calls them on that default. And now, that real estate, small to mid-sized syndicator, or owner, what's his recourse? Well, first thing is, he might not even know, hey, that some outside external force kind of kicked him out, and now, he or she is out all these due diligence costs, probably has some angry investors, and so forth, and, just maybe walks away and takes the loss, or then, kind of finds out, there was some external forces, and at that point, there's a decision. Am I going to throw more good money maybe after a bad situation? And, that's kind of, where we can step in and, maybe not get you the property back, but at least get you some type of monetary compensation, where at least you can make things right or make the best out of a bad situation. And that's the great tool that litigation finance can do.
So in that scenario that you just laid out there, Roni, let's just continue down the line a bit, and let me assume that the deal, I'm the syndicator, and I wanted to buy the property, and the seller called a technical default on me, and then the property went to settlement with this other REIT already. Maybe it was a 60-day period. Is that too late for me to have that recourse, or is it typically for me to have any recourse, I have to file that, before that deal settles and as soon as that default is called?
We leave it. The one thing about us, we're a litigation funding company, so we're not a law firm. We don't give any legal advice or so forth. We kind of imagine us. We're kind of once we write that check, we're your cheerleader. So, it's up to the plaintiff, that syndicator, to make that decision. Hey, do I want to file suit now, or do I need to gather some more information, and then file suit? And we let them make that call. The great thing about us, we always tell, the plaintiff, you and your lawyer are the captain of this ship. You decide, how to take action, what to do. and so forth. And we let them kind of drive that boat and make that decision. We're just giving them, quote unquote, the financial firepower to move their case forward. We don't, legally and ethically, we don't guide or make any decisions. We leave that for them to decide.
That's good to know. Would you be in a position here to refer or, select an attorney in a particular market for somebody that had a particular type of lawsuit that let's face it, $9 billion plus worth of litigation, you've probably seen a lawsuit or two and maybe have a better eye for selecting an attorney for a specific circumstance, than even some experienced syndicators or plaintiffs are going to have. Is that any assistance in addition to the finance?
What we will do is we will help, let's say, hey, you're in Austin, Texas, or Corpus Christi, Texas, or, hey, in, Los Angeles, California. Have we experienced, are there some lawyers I'd probably say, you know what, he or she is, a bulldog. This is probably someone I would never want to get sued by. Yes, we have a list, and we'll say, hey, listen, maybe this is, this is a local attorney in your neck of the woods. You decide who you want to pick, but here is one or two good options of some talented lawyers to go talk to. And, not only do you need to have a good case, in today's legal system, the stacking horse or the person that's going to get your case over the finish line is the lawyer. So not only having, damages and having the unfortunate incident of someone, taking advantage of you, having a talented attorney is so crucial. And we definitely try to say, here's some good options of lawyers you need to talk to, and make a decision forward from there.
Yeah, that makes sense. I mean, when I started out in the business here, over the last 13 years or so, for a good number of those years. I mean, I'm sure a lot of people think this too, just like you'd mentioned in the beginning here as you started talking about it, that we think the best of people and we don't want to get involved in lawsuits. And, you make your first $500,000 or maybe you make your first $1 million and you get like pretty lucky, but then you get good at making those particular type of deals and volume comes. And even if it's a business, the same kind of thing, you have one location and you get more and then volume comes. And that's when you're dealing with, more and more lawsuit risk. And me personally, I don't know, we're in the middle of probably at any given time a dozen lawsuits. And a lot of them are very, smaller, specific performance lawsuits. People are trying to back out on deals, things of that nature, and we can cover the bills on those. We've been sued. We've been sued for, odd, weird things that we're defending ourselves. But one of the most important lessons I think I've learned, aside from becoming comfortable with the fact that lawsuits are part of doing business, it's a risk, it's a risk. It's not a course of normal business, but it is a course that can pop up in business, and you'd rather be prepared. You'd rather do it. You'd rather know how to act when it happens. And part of that would be to select the right counsel, the right attorney. And I've learned kind of the hard way that not all attorneys are created equal. And some attorneys, like where I am in Illinois, specialize in basically doing title work and putting notary stamps and, dealing with title issues and kind of like standard closing attorneys for whatever, single family, residential, maybe commercial deals. But they don't like to get out of that lane, and they're not necessarily familiar with, the power struggle or the long-term negotiation, if you will, that's involved in being involved in a long-term lawsuit. And so like my takeaway and like a huge value add for anybody listening here is finding the right person who perhaps can help you find the right person that's capable of dealing with that specific situation that you're in the middle of. I mean, that's really critical when, at least in my eyes, when you're having to defend or if you're a plaintiff in a lawsuit.
Absolutely. Like, I mean, for example, when I was at the fund, hey, we had our go-to real estate lawyer. Like, this was the person or the firm that we used for, closing transactions and so forth. And then, there was, a go-to firm for litigation, i.e., this person, he or she, from, 8 in the morning to 8 o'clock at night, they were just in fights. I mean, that's all, they litigated day in, day out, and so forth. And then, the law is, very complex. Just because someone's a litigator doesn't mean they can litigate now any type of case. If you got, an employment discrimination case, there's, talented lawyers that's what they do, just for employment discrimination. Hey, you created some IP or, intellectual property or trademark. There's a lawyer that, focuses, on that. So, I think you kind of hit the nail on the head, finding that, talented lawyer, that has that experience, and is really focused, on that, is almost just as good as, the unfortunate, incident of, getting damaged, because that person can get you, across, that finish line. And, when in the situations that we're involved in, we are always dealing against a small plaintiff versus, Fortune 500 versus, city, county, or extreme high net worth individuals. So we're already, fighting a very difficult battle with, individuals that have no issues writing big checks, dragging lawsuits out for years, and just, kind of attacking, the plaintiff as much as they want to without any issue.
So you're lucky, and just like the high net worth individuals are also lucky to have the experience of the contacts, the connections, having been through the lawsuits a number of times. If you didn't have any of that at your disposal, is there any tips you could give to somebody? Like, where should someone like me start, or one of the listeners start, if they thought they had a lawsuit or were a plaintiff? I mean, what can they do aside from, calling someone like yourself that was experienced to find the right person in their marketplace? Because we have people all over the country that are listening right now, and obviously you and I don't know everybody all over the country. Is there resources? Can they go to the state's bar? What would you do to find a good attorney who had a certain specialty if you had to in a market where you had no contacts?
I mean, first thing I would try to do is, figure out what exactly is your issue. Is it, hey, is this a real estate lawsuit? Is it employment discrimination? Is it so forth? And then a lot of times, we're a little bit different organizationally speaking than I think a lot of companies out there. We believe, putting, good karma or good deeds out there, and it will come back to you, in tenfold. So, first thing we'll try to tell folks is, listen, why don't you, we'll look up our database and in this situation, someone probably doesn't have a database. Why don't you first try to look for a contingency fee lawyer, i.e., figure out what your exact, issue is, search for, a contingency fee lawyer. That means, that lawyer is going to work for free, but will take, could be anywhere from 20% to 40% of whatever amount you win. So if you're in, a financially strapped situation, but, maybe don't want to take on litigation finance, then, go find yourself a contingency fee lawyer. Look at the reviews online, of that lawyer. Do your homework. I mean, I tell anyone, don't make a rash decision. Take some time, think about it. But the first thing I always try to tell people is, try to, I don't want to push you or sell you on litigation finance. If you can find a contingency fee lawyer, do that. And a lot of times we even, the database of folks that we give out are contingency fee lawyers, and folks love that because now, they've kind of said, okay, maybe I can sit back and not worry about writing checks to my lawyer. But, some of the situations we find a lot of our clients are in is like, not only do they have the issue of, hey, I need to write checks to my lawyer, how am I going to stay afloat during this lawsuit? And, countless times we have seen, these defendants and their law firms, their goal is to stretch time. They want to use time as an enemy for you. They want to stretch things out, put you in a tougher decision. So when they finally make you that settlement offer, which was usually in the beginning is 0 or pound sand, now they'll be like, okay, you know what? Here's, 5 cents on the dollar, 10 cents on the dollar. And, you've spent all this time, energy, and anguish, and they've kind of put you under the stress of all of this, where you're like, man, do I take this, peanuts? And that's where, kind of we step in and say, hey, listen, we can help you out and give you that time so you can make an informed decision. It's your call, whatever amount to settle at. But at least now you have some time to make an informed decision. But sorry, to circle back to your question, I would say the first thing is try to search for a local contingency fee based lawyer, and type in hey, employment discrimination contingency fee lawyer, Chicago, Illinois, and see what pops up. Start to check people's reviews. There's a website called avvo.com where you can check lawyers' reviews, and also search for all types of lawyers in any city, state, and so forth. And just kind of, do your due diligence on your lawyer, because that person is going to have to convince, either a jury of your peers or a judge, what happened here is, your version, and, the facts and, line up with the evidence that you have, to this story, because, there's not going to be any defendant that's going to stand up and say, you know what, you caught us. We're bad folks. Everything you said, in this complaint, we did it. I mean, I've never seen that happen. And, they're always going to throw, defenses up and say, no, that's not how it happened. We're great people. We're publicly traded. Look at all the good that we do. And, we build, schools for the underprivileged. And this is just, a bad plaintiff that has hooked up with a, even worse litigation funder, and, a horrible attorney who's trying to take advantage of my poor Fortune 500 client. That's what we see day in, day out. I mean, I can guarantee you, we are not on any, Merry Christmas, Happy Kwanzaa, list of any, Fortune 500 defense counsels. I think, if they saw us on the side of the road and, with a flat tire, they would drive past as quickly as possible. So, I mean, that's fine. We're here, we're here to serve a purpose, help people. And, another thing about us, hey, do we understand, listen, you're a big company. Do you need to defend yourself? Absolutely. Hey, defense counsel, they have a job to do, and so forth. But at the end of the day, these are people that were truly injured. As we tell our clients, the other side has an option. They can settle at a number that you feel is acceptable, If not, hey, that's what the courthouse was built for. Let's go to court and, you decide, and let, to go to court and let the judge or the jury of your peers, hear the case and let them decide, what's fair and proper, compensation, for your damages.
So we are a real estate investor audience typically listening here, and I know you have a real estate background. Who are the ideal clients, if you will, for litigation finance? Is it only real estate, or do you also have a broad spectrum? And if anyone's listening, maybe you should touch on a little bit of like the size of the case. We talk billions and hundreds of millions. Maybe all the lawsuits have to be Fortune 500 and $20 million in damages and up? Or do you have like some good examples so if anyone's listening, they would know, hey, I got to raise my hand. This is actually a fit for me.
I mean, we fall into the funding, anyone that needs funding from $5,000 up to $1 million. That is where we fund. And if people reach out to us and say, listen, I've got, this, I need $5 or $10 million worth of funding, we're like, great. Here are some other funders you can talk to. Call XYZ person at this funding firm. They're going to be great contacts for you. We really, our gamut is all over the place, from folks that have, been injured, in some, tragic accident, wrongful death, to, real estate, to breaches of contract, employment discrimination. Another thing that we're doing a lot right now, going back to the real estate aspect of things, folks buy insurance and, insurance is supposed to cover you. God forbid when something, occurs, on your property, there's a fire, and so forth. Let's say, the syndicator or apartment owner, God forbid, has a fire, the building burns down, and let's say, you've displaced 20 tenants, you got to figure out how you're going to take care of your tenants. You've now lost income. You bring out the contractor tells you, hey, it's going to cost, $1.5 million to rebuild. You give it to your insurance company. Insurance company tells you, you know what, we looked over what the contractor said. We think his numbers are off. We're only going to give you $1 million. And then you're like, well, I'm not rebuilding this thing, and this contractor is a third party. This isn't my, Uncle Vinny, here. And, where's that $500,000 now going to come up? And as you can imagine, during all this is happening, the bank tells you, hey, it's the first of the month. We want our mortgage payment. Investors are calling you, if you have any, saying, hey, where's our distributions? And tenants are calling you saying, hey, what's going on? Do I need to find a new place? Where are you going to put me in the time being? And so forth. So all of these things happening at one time, it's kind of the perfect storm. So now you got an option. Do I take the $500,000 loss? The only other option is, I guess, I've got to now, sue my insurance company. And during this time period, what am I going to do about this displaced income? So we step in, cover the displaced income, so you don't have to do capital calls. And then, you can make a decision with the insurance company to settle at a different number, or, they finally compensate you for, what your cost is, and so forth. Because at the end of the day, that's what the policy was there for, to cover, fire damage and so forth. And at the end of the day, you have to force them, to sue them to actually, pay what's required under the policy. And we've seen that happen time over time.
So are there any other things we left out that people would probably want to know about, for litigation finance here?
I would say, we try to kind of open, be as transparent as possible. The unique thing about litigation finance, it's not a loan or anything like that. It is a non-recourse advance. So we're taking on the liability, of this lawsuit. Should the lawsuit go great, i.e. you win it or you settle, we get back our advance plus a return. If it goes sideways, you lose or case gets dropped or something, no harm, no foul, we took on that financial loss. So what I tell everyone is, listen, this is there's a high risk here if it's lawsuits, it's unknown how lawsuits can really go. It could be, got an unhappy juror that day or the judge woke up on the wrong side of the bed and just, nothing's going to go your way today. So a lot of things can happen. So we tell people, this is very expensive, advance, that we are taking, a risk because, the lawsuit could be lost and you owe us nothing. So, that's why we always kind of explain people their options. Hey, you can go to a contingency fee lawyer. If you want to go get another loan out and, give personal guarantees and all of this stuff, of course you can do that. But usually what we've seen is when people are in lawsuits, banks usually don't want to kind of lend and get involved into a problem and so forth. So we try to be upfront and understand, hey, the situation people are walking into, that, the expense, of litigation finance. And usually people, are, they say, thanks for explaining everything to me. I get where you're coming from. Yeah, it's a high risk. So, hey, there's going to be a high cost should things, go well. Great thing about it is, hey, we're stepping in and we're believing, in your case and backing you up. You're still fully in control, of your property, your asset, and your lawsuit. We're not, taking, over in any way. So, people really appreciate that they're still in the driver's seat.
Yeah, I think that was an important point here as we're wrapping up, is that, if you do fund the deal, and the lawsuit doesn't go like everyone expected it to from the plaintiff's side and from the funding side, they're not on the hook for $5, $10, $50 million, whatever it is that you guys had worked out. What would be the turnaround time, typically if you were going to fund a deal, like on the apartment building fire example, where someone was, had displaced tenants and the whole thing, how quick would you be able to get cash in that person's account? How do you?
From start to finish, in commercial litigation matters like those, we are funding under 14 days. So from the day we have a full package to a wire hitting your account, in 14 days you have the money, because, we understand people are in a difficult situation. We're not here to, drag, things out, and so forth. We want to kind of give you that, assistance or the financial firepower to kind of get this case moving forward. So the sooner you can kind of make a decision of, hey, we're going to settle this thing, or, you know what, heck no, we're not going to settle this thing. It's going to go forward, to trial. Yeah. So, we want to kind of, push it as quickly as possible. And that's why we always operate in those 14 days or less, actually.
Gotcha. So I usually ask my guests, Roni, a couple questions as we get to this section of our episode here. So I'm going to give you the latitude. Normally I ask for real estate investment, jewel of wisdom that you would go back and share with your younger self, maybe just getting out of college. But because you have the litigation and you have the real estate investment side, I'm going to give you the freedom to pick whatever jewel of wisdom you would go back and share with yourself, as you were, 20, 23, 24 years old, if you could go back and whisper something.
I would say definitely, measure twice, cut once, and maybe to expound on that a little bit more, don't get caught up in, hey, we want to do something quickly and so forth, take a minute, step back, review things and, just kind of digest things because, I'm sure you've seen it, not everyone in the real estate field or even in life is the most straightforward or honest person. So, kind of to save you that headache, drama, and brain damage, kind of, take things, at a more, be expeditious, but don't move things a little bit too fast just because, people will almost tell you anything. And then once you kind of start to do your homework and review it, you'll start to see, well, hey, things are, I didn't go to Harvard, but, 1 plus 1 is still 2, why aren't the numbers matching up or why is this information not, adding up as you said it would?
Yeah, that is great advice. I am surprised I don't hear that exactly as often. I don't think I remember hearing it too much ever, but you're absolutely right about doing the due diligence and like watching, especially me when I was younger. I'm remembering back, and I say younger, like 3 years ago, some deals I should not have done, and I got caught up in the excitement, hot neighborhood. And, luckily they're deals that turned out they're fair deals, but they weren't like home runs like I thought they were. And a lot of that was just like you said, it was like moving too quick, listening to the real estate agent tell me, it's going to be $900,000 property or whatever it was and pulling the trigger too fast. So great advice there. So Roni, do you have a book recommendation or maybe two, anything business, real estate,
Sure.
litigation related?
Well, I wouldn't say the litigation related. I would say Dr. Rick Rigsby's Lessons from a Third Grade Dropout is excellent. If you really don't have time to read the book, if you go onto YouTube and just type in, Dr. Rigsby's Lessons from a Third Grade Dropout, very kind of inspirational and kind of, shows you, doesn't have to, you've got to come from, ultra wealthy family and, kind of, it's a very kind of motivational and great, book. But, if you want to watch the YouTube, kind of try to summarize the book a little bit in that speech where you'll find it. The other book, in my personal opinion, I think the two best marketing people or families out there, I would say, the best marketer, number one, I would say is Elon Musk. I think he could sell, snow to an Eskimo. So kind of reading his book, I think it's called Elon Musk, Tesla, SpaceX, Fantastic Future. And, I think the other best marketing family has got to be, the Kardashians. I think they can, sell anything. If either Elon or the Kardashians ever opened up a marketing firm, that is probably the best people. They will help you sell whatever item you have, extremely, well, just due to, their, I still believe, some people might disagree with me. These two, have some excellent marketing prowess that, some people sometimes just kind of overlook, from Elon who can, sell $10 million of, something that's, not a flamethrower and, and he's able to sell, these flamethrowers and sell $10 million worth of it. I think that's just ingenious. And to the Kardashians where, they've built an empire, they can sell, anything and everything. So, just, there's talent that, has to be given for some of these folks, marketing prowess.
Yeah, you're right about that. And I'm going to tack on a little lesson there. I just wrapped up Henry Ford's biography, and I thought, like, as I'm going through it, I was like, wow, I think Elon took a few of these pages out of the Ford history here and kind of duplicated the same thing. Obviously, he's revolutionary. Interesting perspective on the Kardashians. I mean, you read the numbers on some of the cosmetics and stuff, but I'm blinded by the celebrity. It's like, oh gosh, the Kardashians. And so I never really looked at them through that lens of, wow, look at these great marketers and look at what they're doing and what lessons could be extracted from the spectacle that the Kardashians put on in the public eye, right?
Well, yeah, I just kind of look at it. I mean, if you look at the billions of dollars worth, I mean, if you kind of, step back from, the reality TV show and, everything else. But I mean, if you look at, the dollar volume that they have been able to generate, in sales and different products, that by itself, you have to give credit, for. I mean, at the end of the day, hey, this is hard, facts and numbers that have been generated. So you do, have to give credit if you dislike or disagree with anything else. So, that's kind of just, my viewpoint. I think, they can take their talents and, sell it to almost to anything else.
Agreed. So, Roni, if anyone is listening, wants to, has a litigation thing going on and wants to talk to you or someone at the company, is there a website or some contact information that they should use to reach out?
Sure thing. Website, it's, for Town Center Partners is your TCP.com. I'll give you my email address. It's Roni, R-O-N-I, at yourtcp.com. And I'll even give you, we're very easy to reach. Our office line is 703-570-5264. Again, 703-570-5264. And, hey, would look forward to help folks out. And if we can't help you out for some reason, we'll try to get you in contact with either, a talented lawyer or even another litigation funder that can help you so, you can get the situation corrected one way or another.
All right, cool. That brings us to the end of the episode here. Hey, Roni, I appreciate you blocking out all the distractions, giving us some time and a ton of jewels of wisdom here to take away. Thank you for coming on the show.
And thank you very, very much for having me on. It was a true pleasure, and thanks so much for your time.
And thank you for tuning in to this episode of the REI Diamond Show. Keep an eye out for the next episode. Chief Strategy Officer at Renters Warehouse joins us to discuss his recent sale of Own America, the rental portfolio sale platform that Greg founded and designed, to Renters Warehouse. Also discussed on that episode, volume house flipping, compiling 25, 20, 15, 30 units and then flipping them all at once to funds, hot markets, and also how to buy houses at retail and still make money in real estate. I can't believe it's been over 4 years since the first REI Diamond Show episode. I recently read all the reviews on iTunes written by grateful listeners like yourself. And if you are one of them who has already left me a review, thank you. I truly appreciate the feedback. And if you haven't left a review yet, I'd like to ask a small favor. Go to the podcasting app where you've been listening to the show and leave me a review. It takes 30 seconds and also helps other real estate investors find our show. I am grateful for the effort. Attention deal makers, I am buying. I buy a ton of houses in Atlanta, Chicago, and Philadelphia regional markets. Here at Diamond Equity, year to date in November here, we've closed on 179 deals and have another houses in the inventory waiting to be renovated, sold, and settled. That said, we have plenty of capital and are ready to buy more. So if you have a deal, please contact me directly, either using my email address or at the form at reidiamonds.com. Both come and are monitored and replied to directly by me personally. Are you an accredited investor interested in short-term passive mortgage investment opportunities with double-digit returns? Head over to Fund Rehab Deals to check out available high-yield investment opportunities. We've reached the end of this episode. Thank you again for tuning in to the REI Diamond Show. Dan Breslin here. I'll catch you on the next one.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.